Nothing kills a deal faster than doubt about the integrity of the numbers. As a seller, you tell a story and you need to have the trust from the buyer to make the transaction work.
Welcome to the Mastering E-commerce Marketing Podcast. I'm your host, Eitan Koter, co-CEO of Vimy. In an era of rising acquisition costs and increased competition, this podcast is dedicated to helping you drive sales, engage customers, and build meaningful communities so you can turn passive visitors into active buyers. Don't forget to subscribe so you won't miss out on future content. Now let's get started with the episode. We have a very, very exciting episode today discussing finances and let's call it strategic financing and management accounting. And I have one of the experts in the field, Rob. How are you? Welcome.
Hey, good afternoon. I'm good. How are you?
Yeah, not too bad. Getting like winter here. Strange. Yeah, we're not used to it so much, but it's happening right now. How on your side?
It's getting colder here as well.
Yeah.
And I can't wait for spring to come again.
Okay, great. Yeah, you have to enjoy every time of the year, I guess. I try to use the best of it. So Rob, before we dive in, and I think we have plenty of things to discuss today, which are very, very important for any e-commerce founders out there. If you can share like 3 words that better describe you and maybe important to you and why.
That's actually difficult. I think the first one, freedom. Everything I've done so far, freedom is like my personal core driver. I want to do things in my way. I think that my term is probably the second one. And since I became a dad a couple of years ago, I realized values are super important as well. I want to make sure that what I do actually adds value, that I can be proud of it. So it's not just about making money, but it's about doing something that I'm proud of and I can actually tell my son, this is what I did, this is why I did it, and this is why I'm proud of it.
Interesting. So we have freedom, we have values, and the third one?
And my terms. It's technically 2 words, but
yes,
my way.
My way. Wow, you're actually touching like the heart of entrepreneurship, I guess, just trying to define what's working for you, right? That's on the freedom side, probably work-life balance, everything. Obviously, what's the value you deliver to the world? It needs to be differentiated, it needs to be substantial, right? And defining this on your own terms, so really love it. It's a really... I know it wasn't easy for you, but we appreciate, the effort. It's the results are absolutely perfect. So thank you so much for that. So Rob, just tell us who you are. What do you do?
I'm Rob. I run a company called Insight Matters. We provide fractional CFO management accounting to online businesses, mainly e-commerce and agencies. And I've been an entrepreneur. I'm originally from the Netherlands, but I've been an entrepreneur for 15 years now. And not by choice, but kind of by necessity originally.
What do you mean?
I was working for a bank in the Netherlands. They sent me to China on a 6-month project. And after 6 months, the bank told me to go back to the Netherlands. And I thought that was a really bad idea. Because the Netherlands is very mature, very stable. There's not much dynamic going on there. And in 2010 in China, the energy was amazing. So I could either choose to go back to the Netherlands, get a local job in China, which wouldn't pay me much, try to get an expat job, but with 1 year experience, nobody's going to pay me an expat package.
Huh?
So I figured, great, I'll have to do it on my own. I'll create it by myself.
So what happened? What did you do?
I started a technology and investment firm with a partner. Basically, we would use Chinese funds and Dutch funds, investor money, to buy like IP for clean tech, for industrial clean tech in Europe and try to build companies with that in China. Great idea. Pushed really hard on that for 7 years. I think we were a bit too optimistic in how hard it was to actually build something in China. So after 7 years, I realized this is not going to go anywhere, and I pulled the plug.
Got it. It's also important to know where to stop, right? And that's very, very important. So what inspired you to launch Insight Poppy?
I wish I had a very fancy story there, but when I pulled the plug on the other business, I still need to pay the rent. So I started working as a finance consultant for the company of a friend of mine. And then he referred me to somebody else. And before I knew it, I was a fractional CFO for a couple of companies. And I got really, really frustrated with the financial data that we get from our clients. So at that point, I realized if I want to be a good fractional CFO, I need better data. I might as well do it myself.
Got it.
And then we decided to bring in a couple of people and build it into a company to really just take over the whole finance function with the ultimate purpose of actually being able to get good value on the CFO level.
Got it. What are the major reasons that brands, and you work with like 7-8 figures brands, right? What are the major reasons or the drivers for them working with you?
Typically, because they realize that their current finance partner, their current bookkeeper or management accountant doesn't understand e-commerce. and they ask questions and they don't get good answers and they get frustrated and then they look for a better solution. It's typically, if you talk about landed cost, for example, a lot of the more tax-oriented accountants, they don't process it in a way or they don't book it in a way that is actually helpful or insightful for an e-com entrepreneur.
Yeah. Obviously, this data is like gold if you analyze it correctly and you gather the right insights to make a strategic decision for the future of the company, right? And I think this is the position that you are taking. You have this nice concept of management accounting versus tax accounting. So can you share more details about that?
Oh, yes. One of my personal pet peeves. Most CPAs tend to do the accounting so that you can file the taxes easily and maybe even optimize things for taxes. And that's important. Don't get me wrong. That's really, really important. But as an owner, that's something that happens once a year, basically. So that is relevant once a year. But you should use your books for decision-making on a monthly basis, maybe even on a weekly, and in some cases on a daily basis. So the books need to be set up and organized in a way that you can actually run with that on a monthly basis. So you can actually use them for decision-making. And then once a year, you pull the books offline, make a few changes, and then let the tax accountant file the taxes.
Yeah, that's that compliance part, right?
Exactly. That's the compliance part. It's important that it has to be done well, but that's not the purpose of accounting. That's tax accounting.
Mm-hmm.
Again, that's important, but as the owner, you should use the books on a management purpose. So a typical issue that we see is that sales is lumped into one row. There's no breakdown in SKU groups. There's no breakdown in channels. And for taxes, that's fine because nobody cares which SKU did well. From a management side, you want to see the revenue breakdown and your gross profit breakdown over different channels, over product groups, over maybe even on the SKU level. So that requires more detail and more granularity that's not relevant for the taxes. So if the books are set up for taxes, it's useless for management.
Interesting. And another aspect is that you want to monitor it and evaluate it like throughout the year, right? Not wait for the one event right at the beginning of each year and for compliance purposes. So how is it been done? How the companies can aggregate the data and can go to this granularity level? How this process is happening between you and the company? You analyze the data, you provide some insights, you brainstorm together. How's it process working on a day-to-day level?
So there's basically three tiers. The way we break down the finance function in three tiers. On the foundational level, there's management accounting. Getting the data from Shopify, from Amazon, from whatever other platform or channel you use into an accounting system. Typically, traditionally, that's QBO or Xero. Finaloop is really good as well if the company is really well organized and relatively simple. Second layer is reporting. Translating that information into actionable insights. Whether that's a dashboard, whether that's a couple of metrics, something that takes this wall of numbers into something visual that the owner can look at or the CFO can look at and say, hey, these are the trends. This is standing out. Here we're doing really well or better than expected, or here we're doing worse. But that translation. And then the top level, that's really the CFO. And that is, okay, how does this data fit in the overall longer term plan? Are we looking for an exit? Are we on track there? What do we need to adjust or what do we need to hit in the next 6 to 12 months to actually hit those longer term, bigger picture goals? And we can do all three, but I think the most important thing, the least sexy part, but the most important thing is the management accounting, because everything else builds on top of that.
One of the greatest struggles these days is, again, because of the use of technology and the ability to aggregate so much data, is just this overflow of data, right? It's you have so much data, you don't know what to ask, right? So how do you prioritize what's important and what's not?
That we always go back to what's the purpose of the business.
Mm-hmm.
You can have massive amounts of data, but if you don't know what you're trying to optimize for, you don't know how to segment or how to shift the data. So we have a client that is looking to, that actually grew to about 30 million run rate in about 18 months. For them, working capital management, cash flow planning was the most important thing. So everything we do regarding the data is about what's the cash flow, how do we organize the cash flow, and what's the cash flow forecast. We have another client that is looking to sell his business. They are mid-seven figures. For them, the question is, how do we optimize the story for an exit? How do we maximize the profitability without harming the long-term growth of the business? So there, you take a different perspective. So you look at different numbers and you take different parts of the data.
Yeah. How do you make sure that the data is reliable enough to take strategic decision, right? Explain the financial hierarchy of needs.
Yeah, well, that's basically that whole, the three tiers, the pyramid, we call that. In the end, you can have an amazing, expensive, or the best CFO in the world. But if the underlying data is really bad, you can't make any decision on that. It's like you can't build a really nice apartment or a really nice house on shitty foundations.
Sure.
That's going to collapse. It will look pretty, but it's not reliable. Doing the groundwork, making sure that your books, your chart of accounts, your operational processes are solid and efficient and relevant. That's where everything starts.
Mm-hmm.
That doesn't mean every SKU needs to have its own P&L, but it doesn't mean you need to have a relevant level of breakdown in your P&L. Yeah. Typically, I would say at the very least, you need a P&L per channel because that's going to be the main driver. If you have multiple SKU groups, product groups, probably a P&L per product group would be very, very relevant as well.
Mm-hmm. Mm-hmm.
And depending on how big or how complicated you get, you want to have even more detail in there, or even more granularity. But there is a point where the extra cost of making it more granular doesn't weigh up anymore against the extra benefit of having that level of insights.
Yes. Hey, we know in marketing that some of the channels are not performing, to the absolute performance that we love, but we know that there is kind of an attribution between channels and there's like a halo effect or one channel impacting the other. Definitely if it's online and offline type of use case. And obviously on product, we are in an era where non-profitable product line are being just eliminated, right? It's a matter of just zero in on what's working and just to try to use it to the best experience, right? In terms of generating the profits. And you mentioned also like exit readiness, right?
Yes.
When founders need to think about the exit, like
I think the first question is, what actually do you want? Do you want to exit? Or do you want to fire yourself and hold it? Or do you like running it and do you want to keep running it as a lifestyle business? That's all perfectly fine. If you want the optionality for exit, ideally you start thinking about that 3 to 5 years beforehand. So you can make a longer term plan and build up the credibility that you actually deliver your progress against the plan. So if let's say in early 2026, you make a 5-year plan, and in 26 and in 27, you deliver on the growth that you planned, then in early 2028, you have a rock solid story to a potential buyer why the rest of that 5-year plan growth is also realistic.
Mm-hmm.
Now, reality in e-commerce, nobody makes a 5-year plan that actually stick to.
Sure.
It is better if they do, but at least a year beforehand would be good because you do need to prepare your story. You want to have all your documentation ready. That's the financials, that's your dashboards, that your team meetings, sessions, all the documentation that you have that is helpful in telling the story to the buyer of why this is such an amazing business. You want to prepare for at least a year.
Yes, that's a very, very important. I mean, we remember the era when you had a drop shipping business and you could exit the business, and maybe you had an Amazon store, right? And it was enough for exiting.
Yeah.
It's not enough, although some of those transactions are coming back. What do you see in the market right now? What are like the fundamentals that a brand needs to have in order to be positioned for an exit?
Okay, I'm biased here, but squeaky clean books is the number one thing. We've been on the buy side as well, doing quality of earnings reports for one of our bigger clients, and nothing kills a deal faster than doubt about the integrity of the numbers. That's instantly killing, because in the end, the buyer always knows less than a seller. So as a seller, you tell a story and you need to have the trust from the buyer to make the transaction work. If you're telling them a half-assed story, or there's data missing or something else that triggers questions on the buyers on your integrity, that will kill the deal.
Mm-hmm.
So that is the most important thing. I don't necessarily see a very clear trend in how profitable you have to be, or there's of course an impact on a multiple, but it's not that if you're having low profitability, you can't sell, you're just going to get a lower price. I think the biggest issue we're seeing is on acquisition strategy. If it's single channel, especially if it's paid ads, that gets harder to sell because acquisition cost is just going to go up, and that puts some question about the future profitability of the business.
Yes.
Do you see that as well?
Yeah, I mean, I see that. Definitely, I agree with the profitability. There's nothing, written in stone, but I think one of the fundamentals is a multi-channel acquisition efforts, right? One channel is not enough. They don't have to be all, profitable, but they need to be generating good amount of business. Earned versus owned media, right? If you have a good database of newsletters that you can retain, you can upsell, some of the loyalty programs that you can use. Definitely proven growth trajectory in a very interesting market. This type of deals will work. Again, for a business like that, I'm not sure if the founders would like to sell, right? But you need to have a mix of sell side who are interested to maybe raise funds or maybe exit and do something else or spend more time doing something else or still be involved in the business, but a buyer is happy to do. And yeah, it's a thriving ecosystem. We see the number of deals are increasing right now. So I think we're in a good trend on that sense. There was a little 2 years of shock after COVID, right, where everything was so difficult and competitive. And I think a lot of companies just refocused and regained the ownership on the channels and the ability to execute.
I have the impression that after most of the aggregators imploded,
Mm-hmm.
the whole M&A landscape was a bit struck with fear, I guess is the best word, because everybody's like, "Ooh, apparently it's very difficult." And we also see volume going up. We've seen a couple of clients both buy and sell, but is nowhere near the crazy multiples there were in the time of Strasio.
Yes, for sure. Great. So what are your thoughts around profitability and cash flow? Obviously, hidden profit pockets that are definitely existing in e-commerce type of business. What are your thoughts on this?
I think that profitability, everybody thinks they know their profitability. But in reality, if you look at really the actual landed cost of most products, I think a lot of owners would be surprised that the true profit margin on quite a few of their products is actually lower than they anticipate.
Mm-hmm.
Inventory whole carrying cost is usually a typical one that got forgotten. That takes up working capital, so there has an opportunity cost. The money you have tied up in inventory, you can't spend that same amount of money on, for example, marketing. So those are two really big ones. And I think the biggest issue that we see is bad inventory planning. Or I can't say it bad. Trouble with sales forecasting and therefore trouble with inventory forecasting. Too much inventory is expensive. I don't think that's a surprise for anybody. But actually, stockouts are even more expensive because the carrying cost of inventory is high, but the opportunity cost of the missed margin and the bad customer experience and therefore lower retention of stockouts is even higher. So if there's one thing we would push on, it's sales forecasting and therefore inventory planning. That optimizes cash flow. That's always nice for the owner because it allows you to either take out more money or reinvest more in marketing or in product launches or in whatever other things you want to invest in. But everything comes back to proper sales forecast and therefore inventory management.
Interesting. Yeah. Actually, this is the difference between cash flow and free cash flow, right? You think you have an amount of cash flow, but no, it's stuck in an inventory somewhere along the way, right? So definitely optimizing this is very, very important. Rob, you were an operator by yourself, right? In your career, and now you're focusing on the financing aspect. What advantage that you think it gives you, compared to others who just grew in the financing?
I think the biggest factor is a lot of people that we see in the finance space are accountants that are trying to learn the business side.
Yeah.
And I'm not an accountant, so don't take this the wrong way, but a lot of accountants just don't understand what it actually means to be an owner or what it actually means to run a business. The trade-offs between I have 10 grand in the bank. Do I put it in Facebook ads? Do I put it in inventory? That decision-making, they can't relate. From the theory, they know it, but they haven't lived it. And I think from our side, I've been running businesses for 15 years. I've had the stress of, okay, do I pay my own salary or do I pay my team's salary? Do I invest in this new technology or do I double down in marketing the things we're having? Having lived that experience makes it much easier to communicate and connect with the clients, with the e-com owners, and understand why the things that keep them up at night keep them up at night.
Yes. What are your thoughts on founders that just pushing very, very hard on top line revenues, right, versus just putting more focus on profitability? I mean, it's and I know it changes over time, right? But what is
it changes over time, and it of course depends a bit on what the overall objective is. If you're looking for a rocket ship that you have unlimited funding available, let's say you have venture investment, then top line growth might be the most important thing for you. Mm-hmm. But in general, revenue is vanity. I like to say revenue is vanity, profit is sanity, but cash flow is reality.
Nice.
If you're having good profits, but your bank account is empty, you still can't pay yourself. You still can't pay your team. So in the end, the business should be optimized for cash flow. And then you as the owner can decide, do you want to reinvest it? Do you want to take it out? Or whatever you want to do with it. Mm-hmm. Top line revenue is great to tell at a party, but it doesn't pay the bills.
Yeah, I mean, it's always the debate, right? They want to invest more. They want to keep it to myself. Yeah, maybe I will bring some investors to help me push. These are some of the things that you work with your Can you share some examples of insights that you've discovered, right, with working with customers that make a strategic, difference and just steer one of the keys to success.
Yeah, one of the cases we're working on now, it's Ecom company, about $5-6 million run rate, I think they're at, and they were struggling cash flow wise, going from one Stripe loan to a QBO loan to another Stripe loan. And we realized when we started working with them, first thing we do is diagnose, like, what's the situation? What's the working capital? How's your profitability? There's clearly a problem, but let's figure out where that is. And we realized their gross margin is relatively low and their cost of financing was actually eating up their complete gross margin. So there was no margin left whatsoever for ad spend, overhead expenses, team, anything.
Mm-hmm.
So we've helped them cut expenses to the absolute minimum, trying to refinance some of the outstanding loans at a lower cost. So it actually frees up a little bit of margin. Now their balance sheet is cleaning up, and now they're actually going to become cash flow positive again, and the owner can actually pay his own salary again. So they're actually having a little bit of breathing space.
Nice. I mean, sometimes you face the struggles and you don't know that there are good solutions out there who can help you and just do a complete transition for you.
Well, it starts with recognizing that there's a problem. And in that case, he looked at his gross margin. He thought, the business should be fine. Why is the bank account empty? I'm making good gross margin. Now, he completely did not account for the cost of financing.
Yeah. And Rob, for founders out there listening and also watching this episode, what are some of the immediate recommendations you can suggest, like tips you can suggest that they need to look now in the financials to figure out what's working and what's not?
First thing is, look at your P&L. Does the layout and the structure of the P&L make sense? So is it just one line that says revenue, or is it Amazon revenue, Shopify revenue, like the different wholesale revenue in different channels? You need to see the gross margin per channel. That is the absolute bare minimum. The second thing is, do you have a sales forecast that's reliable? Ideally, build up the habit, make a sales forecast, and compare at the end of the month, what did you actually realize? And you're going to be off. That's fine. But you want to get closer every month. Understanding, are we off on the ad spend? Are we off at the conversion rate? Are we off at the stockouts? Why is your sales higher or lower than you anticipated? And the more you iterate that, the more accurate your sales forecast gets, the more easy your inventory planning becomes, and the more efficient the whole finance setup of the business is going to be.
Yes, that sounds so smart, right? But how do you see the founders actually, adopting this the management style? And a lot of founders came from the product side, maybe from the supply chain side, that are really a bit struggling with various aspects of the business. And obviously they need you to provide support. How do you see this type of adoption of this new?
I'd like to say there's rocket science and everybody needs to hire us, but it's not rocket science. In the end, the way we approach that is we facilitate the process. We give the forecast template, we challenge assumptions, but every owner should know their own customer base better than anybody else. In the end, it's the owner that has to make the forecast and say, last month we did 500 units of this product. Next month, because reason X, we can do 700. And one of my personal frustrations, a lot of entrepreneurs start to use AI for these kind of forecasting. AI is amazing in a lot of things, but AI doesn't know if you're going to run this kind of new marketing campaign or new product launch, what that is going to do. So it's really for the owner to sit down for half an hour and think, what can I do in the next month or the next 3 months or the next 12 months? And why do I believe that? And that's it. Yeah, it's not rocket science. It doesn't have to look pretty. It's just a thinking exercise on what am I going to do to hit that goal.
Yeah. And Rob, how the engagement looks like? I mean, when working with you, you have like variety of like packages or business models of engagement?
We would always start with a game plan. It's a diagnostic project to understand what's your vision, where do you want to take the business, how is the current finance setup, how is your chart of accounts, how do your books look like, and what is working and what is not working. And then, we identify based on where you want to go and where you are now, what things should change or what do you need to do. And then we can help you. You can do it yourself. You can work with somebody else. That's all fine. But it's always a combination of management accounting, reporting, and CFO. And maybe it's just one of the three. Maybe it's all three. That depends on the complexity and on how good or how bad the business is doing. If things are really stable, you probably don't need a lot of help. If things are either going really well or really bad, that's usually when people need more help.
Okay, great. Interesting. So you start small with some mini project that gives a concrete deliverable, right? You show your value. The customer doesn't have to make a big decision on the get-go, right? They get immediate value, and then they can decide if they want to continue working with you. I guess it's working very well for you. Nice. So Rob, how companies, users, founders can reach out to you?
Follow me on LinkedIn or connect with me on LinkedIn is always a good one. Or schedule a call with me through connectrob.com.
All right. Rob, anything else you want to add?
We have a scorecard that we've developed. It's like a self-assessment tool on going through the 3 tiers of the finance function, where you're doing strong and where you're not so strong yet. It's completely free. It's self-assessment.
Thank you for sharing this with our audience. We really appreciate it. All right, Rob, it was really, really interesting. Thank you so much.
Thank you for having me. It was a pleasure.
Thank you for listening to the end of this episode. If you found this episode valuable, please subscribe so you won't miss any of our future content. And if you could share this with just one person, it would make all the difference. Are you looking to accelerate your sales with the power of shoppable video? Explore Vimy, the video commerce platform that includes live shopping, shoppable video, and social commerce capabilities. Visit Vimy at www.vimy.net, that's VIMMI.net, where you can start with a free-for-life package. We appreciate your support and look forward to bringing you more valuable insights in our next episode.